Hi, and welcome again to another edition of Market Analysis for today, November the 1st. I'm Giovanni Benecourt, analyst, trader, and educator with Vantage Markets. Well, another big Fed hike is baked in, but it's all about a pivot, pivot. The penultimate Federal Reserve meeting of the year is shaping up to be another blockbuster event for markets. A fourth consecutive 0.75 percentage point hike is in little doubt when the central bank concludes its two-day meeting on Wednesday, barring a major surprise. But investors are hungry for signs that the Fed will slow down the pace of rate hikes in the months ahead. They have been starved up to now. After a couple of disappointments on that front, markets appear to think this meeting will finally be the one. A half point percentage point hike in December is now more likely than another three-quarters point hike, and that's according to the CME's FedWatch tool. Bond yields have also come down, and the Dow Jones Industrial Average has its best month since 1976. A long-awaited dovish signal from here could pave the way for a strong year-end for equities. However, there's a chance markets have set themselves up for another disappointment. Fed Chairman Jerome Powell is unlikely to completely close the door on another jumbo-sized rate hike, particularly given the central bank's focus on controlling inflation. He could even deliver a hawkish surprise following hotter than expected inflation in September. Given the need for flexibility, Powell may not give concrete far-out guidance. The tone of his messaging will be key, and investors will be hanging on his every word. But Powell could remain cryptic, channeling former Fed Chairman Alan Greenspan's notable line that if I say something which you understand fully, I probably made a mistake. What comes next is more of a topic of debate, and comments from Federal Reserve Chairman Jerome Powell at the post-meeting press conference will be closely watched for clues. Will the Fed gradually reduce the pace of its hikes? Will it pause soon and let the higher rates flow through the real economy? Will it remain data dependent and decide meeting by meeting what to do? There's little consensus in futures market pricing or among economists. On another front, the Bank of England will also announce a policy decision this Thursday, and then there's Jobs Friday. The U.S. economy is expected to have added 195,000 non-farm payrolls in October, down from 263,000 in September. Now, stock indices slipped yesterday. They ended an otherwise strong month for stocks. The Dow Jones Industrial Average, it has its best month since 1976. It surged 14% in October. The Nasdaq, which is more heavily weighted in technology and growth stocks, added less than 4% during the month. And the S&P 500 split it down the middle, adding 8% in October. All three indices snapped 2 months losing streaks. Over the bond market, yields ticked higher today to end a big month. The 10-year U.S. Treasury yield rose 0.27 percentage point in October to 4.07%. That is third straight month of gains, during which the yield has added 1.43% percentage points, its largest 3-month yield gain since 1984. Monday's trading session was a relatively quiet day ahead of a big week of potentially market-moving news and events. The latest inflation data from the Eurozone showed a record 10.7% rise in consumer prices from last October. That data highlights the challenges facing the European Central Bank as it tries to balance a slowing economy and acceleration in inflation. The parade of earnings continues today with results from Airbnb, Advanced Micro Devices, BP, Pfizer, and Uber. In all, some 160 S&P 500 companies are scheduled to report this week. Now, let's take a look at what we can entitle for today. I'm looking at 11,700 as my resistance. It has around that level has created a double top, so we could probably see markets come to it and find resistance, find sellers, bringing the market back down to perhaps my pivot point of 11,470, and closely to that is my support 11,345. As far as it goes for the S&P 500, 4,000 is where I have my resistance. psychological level. Then we have crude Dow Jones Industrial. The Dow Jones Industrial, I have it at 33,500. My resistance, my pivot is below the market at 32,780. So let's see if that will be met. And then we have crude oil. Crude oil is really in a tier, moving higher. So will we reach the $90 mark? Let's see. That will be a consensus for today, or will it stay above 88, or will it come down to 86.80 where I have my pivot? Nat Gas is really also looking to stay around the $5 mark. 550 should be my first psychological support, but below that I have my $5 support for Nat Gas. Will it reach it there today or this week? Let's see. Then we have gold. Gold has really been narrow trading in a very tight channel. 1675 seems to be that point of resistance. The market uh, could probably come down and test it. That all depends, obviously, on the US dollar. 1640 is my pivot for it. Then we have Bitcoin. Bitcoin is just lingering around the 20,500 mark where I have my pivot. 21,000 is my resistance. Let's see if it'll make a pop and trade above that. Then we have the EURUSD is really looking to come back up to parity and stay around parity. That could probably be the case. I'm looking at it also just a sideways trading for today. Very tight channel here. 99.99059 is my pivot, and obviously the parity is the resistance. Then we have the pound. Pound is looking to really stay above 115. That's that's a hard one, but let's see if it'll do so. And then dollar index. Dollar index 110 is my support for dollar index. I have 111.30 as my pivot. 111 really should be also my first resistance, but I'm looking for it to stay around that 110.5. All right, that's it from me today. Have a nice trading day. Have a nice month, and I'll see you tomorrow.